G'day folks, welcome back to another update from Pete's Investing. This is the 29th of July 2024 and today we're looking at gold, silver and Bitcoin, which are all showing divergence on various timelines. Before we go ahead, make sure you hit that like and subscribe button and support us more on the Patreon page where we look at bullish and bearish shares. So let's get into the detail. So this is our heat map and you can see there today we're looking at these instruments, gold, silver, the US dollar and Bitcoin, and you can see they're still predominantly bullish on the monthly, and we'll use the CCI 150 to gauge the trends. On the weekly it's predominantly bearish and mixed signals on the daily, plus some of the other instruments we look at periodically in other videos. So looking at spot gold first, so what we have here on the monthly, the CCI 150 on the monthly is above the moving average range, giving us a bullish momentum, but notice very long term we've got a bearish divergence, which shows that CCI is lower than that point there versus higher highs in the price, and that actually hasn't yet started to pull back. As soon as we see the monthly pull back, and that's a very long-term bearish divergence, we'll identify that. But notice on the weekly we did have this smaller bearish divergence between those peaks there versus higher highs in the price. That's already pulled back and hit our minimum target. And we look at the recent Fibonacci range, so we look at the minimum target of 23-38% level. You can see there it bounced in that range perfectly and then bounced from there. Now since then we've got a continuation of that bearish divergence versus higher highs, and we may see that pull back as well. That's possibly started already with that shooting star there, but we'll keep an eye on it and see how it goes. But at the moment, if that was to play out and I was to redraw this Fibonacci up to that point, to the same level, you can see there, and I'll draw another target range between that point there. That's a new target range for that larger Fibonacci range. That's on the weekly. On the daily as well, let me just blow that up. We did draw this. There was a bearish divergence here, which was hit quite nicely, and that went sideways for a while. It's still going sideways pretty much after hitting this resistance at 24.83. Now it's been bouncing in this range between 24.83 and 22.86. And we've got another bearish divergence continuation. Again, this is independent from the weekly, and we've drawn a target range there, 23-38% level, and that's already just been hit, and that may fall further. You can see there we're still bearish on the, actually no, we're neutral on the daily time frame. Now if we go to the hourly chart and we use if we're trading on the intraday, we only take long trades when the CCI on the daily is above the moving average range. We go long on the hourly or the intraday time frame, or if it's below the moving average range, we go short. In this case, it looks like it's broken into the neutral range, so we avoid going long or short until we see a breakout on the daily. So we avoid going long or short on the hourly time frame. Having said that, we also had a couple of you can see there we had a couple of bearish divergence. That first one was hit, 23% target. This secondary level, that was also hit, 23-38% target. This one went way below the almost to the 100% retrace level, and it's bouncing up from there. Now at the moment there's no divergence on the hourly. That daily was a bearish divergence that was hit. So looking at spot silver next, on the monthly it's still bullish as a trend, but there's no divergence to talk of. On the weekly it's broken below the moving average range, giving us a bearish signal. And on the daily, if I zoom out, you can see there we had a bearish divergence there, hit its 23-38% target. This one bounced down to that almost that 50% level, and it's bounced off that minor support, so we might see a bit of a bounce from there. Currently there's no divergence to talk of, although you could call that a continuation of that bearish divergence, but I'm going to consider that already hit, and we'll see how this goes in the coming hours and days. Going to the hourly chart, again using the daily as a reference, we go short from that point there. That was around the 17th of July, which is about correspondent with this area. So you would have taken short trades, and I've indicated by those red arrows, only short trades only, and close it out when the CCI or the moving averages of the price chart break into the price breaks into the moving averages. Now having said that, when you do see a bullish divergence like there was here, you would have gone short, but notice here we had a bullish divergence, so you would have been cautious and watch this very carefully, and you might have gotten out with a couple of small trades into that point there. Another break below there. In this case it actually broke above. We drew a 23-38% target, went sideways for a number of hours, and then it finally broke above, hit that target range, and then it fell off again. So these divergences more than 90% of the time hit their targets. Now currently the CCI is broken above, but we don't go long. We only we wait for it to break below like it was back here. That would have been a nice little trade to take. We wait for the CCI to break below the moving averages to take any short trades, so long as that daily keeps continuing short. Next, we look at the US dollar. Now on the monthly, it's bullish. It's broken above. It's very thin range there in the moving average range of the CCI, but it's still considered bullish. That's indicated by this color coding. Now we did have a bearish divergence back here, very long-term one. You can see that it fell off and hit our 23-38% target range, in that range there on the monthly. On the weekly, there is no divergence to talk of, although that's bearish according to the CCI. So going short, if you're trading on the daily, going short only. Now on the daily, it hit this resistance up here at 10,619, dropped down, hit its minor support here at 10,321 and bounced, and at the moment it's showing us a neutral positioning. Now you would have gone short during that period there with the CCI breaking below, but at the moment, if you're trading on the intraday, we jump to the 1 hour chart, again using the daily as a reference, you would have taken short trades from that point there, which is the 3rd of July. So go back to the 3rd of July, back to this point, you would have taken short trades during those periods there. Again, be mindful of these bullish divergence. You can see there was lower lows versus higher lows on the CCI. Another short trade there, another bullish divergence. Always treat those divergences. I don't trade these divergences in terms of, in this case, going long. I use them as an exit point. If I'm going short and I see a bullish divergence, I look at it potentially to get out of the trade. In this case, there was a bullish divergence and it bounced. Again, hit that 23-38% target, went as high, almost as high as the 61%, and then it's currently still pursuing a sideways move. So at the moment, it's a neutral on the daily, so avoid going long or short until we see the daily confirm one way or the other. Lastly, looking at Bitcoin. Bitcoin's still bullish on the monthly, but notice the CCI is breaking towards the moving average range. And in fact, it's broken into that range and it's now neutral. So on the monthly, it's neutral. On the weekly, it's also neutral. It's in that moving average range. So pretty much going sideways on both the monthly and the neutral and the weekly. And on the daily, it's broken higher than the moving average range, giving us a bullish signal. So if you're trading on the intraday, in this case the 1 hour, you take only long trades, and that would have been from the 14th of July. So going back to the 14th of July, so you would have taken long trades only, indicated by the blue arrows. Again, paying attention to these bearish divergence. In this case, the price kept rising. The CCI kept falling, and eventually it fell and broke below that 23-38% level. You can see there it broke perfectly in that 38% range and bounced from there. And it's broken through that resistance at 68,480. At the moment, it's moving sideways. But again, the daily's bullish, and you would be taking long trades in this point, breaking above that resistance as well. Again, break and closing out the trade when it breaks below the moving average range on the CCI or the price. So hopefully you got something out of the video. Hit that like and subscribe button. Don't forget to support us on the Patreon page where you look at bullish and bearish shares. Thanks for watching, and see you in a future video.